Good morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Today is Tuesday, it's the 23rd of November, 2021. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. And I'm just going to bring up our commentaries disclaimer. And just finally, our references market scope 2.0. I'll bring up the weekly chart. We'll take a look at that in a moment. Let's just go through some of the headlines that we need to know for today. This is from the CNBC morning note, and it reads as follows. European stocks are expected to open lower as markets look ahead to the latest PMIs for the Eurozone. The data will be the latest indication of the region's economic health as COVID cases surge in the region. On Monday, Germany's Health Minister Jens Spahn warned that probably by the end of this winter, pretty much everyone in Germany will be vaccinated, recovered, or dead. That's the reality, he told a press conference. Germany is considering whether to implement stricter COVID measures and perhaps a partial lockdown like its neighbor, the Netherlands. Germany has one of the lowest vaccination rates in Western Europe. Market participants will also be digesting the announcement Monday that Federal Reserve Chair Jerome Powell was picked for a second four-year term to lead the central bank by President Joe Biden. The move has driven expectations that the central bank will stay on its monetary path as the economy recovers from the pandemic and attempts to combat inflation. Biden has been under pressure to name a more progressive Democrat rather than keep Republican Powell in the role. Powell has guided the US central bank and the country's economy through the pandemic recession, unleashing unprecedented monetary stimulus to keep financial markets afloat. His nomination now heads to the Senate for confirmation. US stocks initially reacted positively to the announcement, but reversed course towards the end of the session and yields continue to rise. US stock futures were steady in overnight trading on Monday. Shares in Asia Pacific were mixed on Tuesday trade. Earnings come from Svern, Trent, Compass, and Kingfisher today. All right, let's take a look and see what the charts are telling us. Hey, Howard. Nice to have you on the webinar. Thank you very much for joining. All right, so let's start off with this weekly. And clearly we've had a rough week so far in the market. It's only Tuesday and we've got this big sell down over here. Let's just take a look at these two candles. These two candles are quite interesting. Now, what we're going to do is we'll combine them, but what we need to understand is that the current weekly candle hasn't closed. It's an active candle, so this sort of is the current sentiment subject to change over the next 4 trading sessions, right? But what we can do is we'll take the high from last week's candle, and we'll take the low from this week's candle, and we'll just draw a range. Okay, so this is our range. Now, where did we open over the last 2 weeks? Well, we opened over here. Okay, so we'll put a little left-hand side tick there. And where have we closed? Well, we're not really closed, but the current closing price is here. Okay, now let's just take a look at this is a very bearish candlestick. Let's just understand the sentiment here. So on this candle, so we're looking at this aqua line study, we opened, bulls take price up to the high, promptly lose control. It gets sold down, shooting right past the open, and the close is near the bottom of the range. So that's a very bearish candle, and if we change it from a bar chart to a candle, I think it will make the point. We'll just make this red, and we'll make this red. So you can see it's kind of this big big setting tail here, and we're right near the bottom of the range. Now, I don't know if we're going to end at the bottom of the range, because remember, we've only had 20% of trade for the week. We've got the PMIs out, but the idea here is, of course, well, is this really something that is dire to the market? And certainly the COVID infections are, affecting market sentiment. Rates, one would expect, are affecting market sentiment, but just in terms of the ebb and flow of the market, at the moment, it's not a big deal. So we've got a reference trough over here, and we've got a reference peak over here. That is, we know 2 points, we need 4 points for a trend. We've only got the references. So this now looks to me as if we can start looking for a third point here. What's the third point? Well, the third point to be looking for is a higher trough. I'll put a question mark because it's certainly still in play. We don't know where this correction is going to end. It might take a number of weeks to for the correction to play out, or we might get some sort of by the end of the week, just to sort of give another scenario. This might be a dragonfly doji, for all we know. But the point is, we've now got the correction because we've got the lower high and the lower low here. But I don't know where this is going to complete. Hence the higher trough question mark. Once we get the correction locked in, okay, then we've got the third point, and then we should look for the fourth point. And this is very much what we were talking about last week. So peak trough, higher peak question mark, okay, because this is how it should unfold for an uptrend to continue. Now, of course, it doesn't mean that there is definitely this type of price action that we may be in for. In fact, it could be something a lot more bearish, which would be like this. So then let's just say we get the higher trough. Well, that would be something I think that we would be sort of celebrating. That's what we're looking for. But then all of a sudden, a lower peak kind of sneaks in there, and the whole tone of the weekly chart would have changed then from a potential higher trough, higher peak into a lower peak, lower trough. And that is effectively a downtrend. So these are kind of the iterations that the market movement can take. We'll just have to keep an eye and track the progress of the ebb and flow. But right now, we are in the midst of what looks like a correction, which is the normal course of a trend. Okay, several EU countries shutting down for weeks from feeder. Okay, so we'll keep an eye on how the peaks and troughs manifest from here. Okay, we'll keep an eye, but at the moment, the way that I think we need to look at it is that we are at all-time highs. Well, all-time highs is a bull trend. Okay, it's not a bear trend. So if we're at all-time highs, we sort of bullish, but we know that we can't move in a straight line. We'll never work. We'll never move in a straight line. We'll always zig and zag. And now we're going to watch how the peaks and troughs unfold. I also want to draw your attention. Last week, I said, when the correction comes, just be careful what you hear coming out of the media. They'll paint a very distinct narrative to match what's happening on the markets. That's just the way the media works. So the narrative here, we've had a terrific sell down. Well, the narrative can't be positive, right? That's not what the media is going to do. So you'll get a negative narrative here. We're going to just watch how the peaks and troughs unfold. Now, what does it mean for us as traders? Well, it does put us in a difficult position because it's counter trending at the moment. If we go down to the daily chart, you can see we're in the midst of zone 2. Well, that's not really an area that is kind to traders, because if the longer we stay in zone 2, but it's neutral price action. Okay, so we want to see if we get back into zone 1, or if we drop further into zone 3, well, then the correction's still on. Okay, then it's still on. Now, what would be interesting for us to watch for, I think, for today is, of course, if this becomes a potential for a reference candle reversal. Okay, so what I mean by that are 3 conditions. So at the moment, we've got nothing here. We've got a possibility that this is the lowest low in at least 3 candles. We won't know until we get more candles here. But zone 2 neutral, looking for some sort of reversal here. We're certainly not in the bear zone 3. We're certainly not in the bull zone 1. We're in the middle of no man's land. The movement from zone 1 to zone 2 certainly is a weak movement. But again, it's not anything we didn't expect. We can't carry on moving upwards forever. We know the markets will ebb and flow. We just have to go back. It ebbs and flows, ebbs and flows. So we're in the middle of one of these corrections until proven otherwise. It's making the price action ambiguous, which is clearly not what we enjoy as traders. Now, the fact that we are in zone 2 is going to make life, I think, difficult. However, this is all-time highs. Okay, we're at all-time highs. Okay, we're moving up. Okay, so now we go down to the hourly, and I think what I'm going to do from my side is look for some bullish triggers. Okay, I want to see if we get the EMA to cross positively. I want to see if the stochastic moves positively. If we move positively there, you know the drill, right? Then we've got to get through to the 80, and we've got to hold the 80. If we hold the 80, then we can get some sort of swing going. See here, we spent a fair amount of time around the upper quartile. Let's call it the upper quartile here. Well, we've got the swing off of that. We are far removed from that type of price action. However, you can see S1, S2 is offering a modicum of support. Will this be sustained throughout the day? I don't know, because we're in neutral. We're in the neutral area, zone 2, and we have an element of weakness that's seeped in. However, that element of weakness, I beg your pardon, to me is absolutely necessary if we want to get a true trend here. So that's the way I see it. Certainly not outright bearishness at the moment. We'll see what happens with the PMIs. We could be going into a difficult period, as Peter says, certainly. But I also think that is very much a media narrative for the time being. And my view on that may change, but I want to keep an eye on the peaks and troughs here. Any comments? Please go ahead and type those in. All right, so let's just keep an eye on this. At the moment, we're still waiting. There's no dual triggers here, but potentially the S1, S2 supports coming in as interesting levels at a time when the RSI is tending towards an oversold. All right. Do I think this is a general correction? My estimate is that this is a general correction, but I want to be very clear. I don't know. The reason I'm saying I think it's a general correction is because we're at all-time highs. We are, a stock index making all-time highs generally should be regarded as bullish action, unless there is an absolute irrational exuberance that's attached to it, which I don't see here. An irrational exuberance would be kind of like a 2000 sort of momentum push right at the end. I don't see that. In fact, if anything, this looks sort of like something that's needed. Again, where I think the actual analysis becomes potentially different is on a lower peak. That's really, I think, the pullback now is not the issue. If we get a lower peak, that to me would be the issue. All right, so we just want to keep an eye on that. This just seems to me, and again, subject to correction, but it just seems to me a normal part of price action. I don't see any sort of irrationality to this price pattern. If we go through, say, to see if I can find the NASDAQ back in 2000. Let's just see if I can bring that up. It's kind of sort of just watch the gradients here, there, and then kind of shoots up, and this unfolds. So it starts off here in January 99. So for January 99 all the way to April of 2000, there is sort of a upward sloping gradient, and then it really just shoots. I don't feel that's what we're seeing here, and we certainly can see that. For most of this year, there's been just a sideways movement, no signs of exuberance in the least. So to me, this for the time being is the pullback that we need. Now let's see if we get the higher trough. Once we get that, then we need that higher peak, and then the trend is on. All right, Howard saying the crypto market also correcting. We're going to take a look at the crypto market tomorrow. We'll make it the DAX and the crypto. All right, any questions, any other questions? Just go ahead and type those in. The market's open. We'll just go through to the hourly just to see how it's opened. All right, so we're now in between this S1, S2. So this S1, S2, I think, is the key level. Do we break below it? Do we break above it? Watch for the triggers here. Clearly, if the stochastics decides it's going to stay out at the lower quintile, then the correction is still on. Is the next webinar the US Open? Yeah, I'm gonna try get the I'm gonna try to do the US Open this afternoon, Howard. We'll try to put on a scalp there. All right. Thank you very much for joining me this morning, guys, and look forward to speaking with you again. Thanks very much.